Good morning. It's Tuesday, May 14th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's consolidation. We'll see some market-moving events today where markets will brace for key data as well as Fed speakers. At 7:30 a.m., we'll see the April PPI, where month-over-month expectations are for positive 0.3%. Last month, we see positive 0.2%, so a slight uptick is what we're expecting on that PPI. Now, the core PPI is expected to come in unchanged at positive 0.2%, and the same as was for the previous month. So at 9 a.m., that's where I think some of the fireworks are really going to get going here. You'll have Fed Chairman Powell speak, where a Q&A is expected to take place. That's where market participants are really going to hinge on every word that he says. We'll monitor for clues as far as any kind of advancement in seeing that next policy shift. A July rate cut probability sits at 24.6% compared to 60% in September. So if you look at some of the large banks, all their research indicates that we'll probably see a cut in September and a cut in December for 50 basis points cuts for the duration of 2024. Now, getting into the S&P 500, despite the recent rally, markets are beginning to stall out near 52.65, which could act as a near-term resistance point. A break below 52.40 in this recording here, we've got 52.46, could lead to a larger correction down to 52.10. Below that, the key level supports the 50-day moving average at 51.86. Many of you were actively buying June micro S&P 5200 puts yesterday, and I anticipate seeing those take 50% of those off on a retest of the 50-day moving average. So we'll really want to pay attention to this data that's coming out over the next 2 days. Now, looking at the crude oil market, quite a bit of data coming out from OPEC participants as far as what their production levels were. Did they create a surplus, a deficit, and then also what are their expected demand figures? So we are seeing a little bit of volatility in the crude oil market at the moment. A big move up yesterday and unchanged here today. So it does hold in a tight range. I would anticipate, though, that I would give the bulls the slight edge. Looking at the July contract, I believe that if we can hold $78 on the downside, that $80 is quite possibly in play. Meanwhile, a break below the $78 level could lead to a minor correction of $77.50. Now, getting into the gold and silver market, it's really been kind of a mixed picture. We saw gold futures yesterday correct about $30, where on Friday they held up $30, so kind of resetting and pulling back to where it was old resistance is now new support. We're in this consolidation range at the moment with 2351 on the upside and 2300 on the downside. If you look at where the market's trading at right now, it's at 2351, so this could be a temporary top or this could be a launching pad for something higher to come. A break below the 2293 level. So again, the range 2351 down at 2300. A break below the 2393 level would be problematic for the bulls and could leave the possibility for a deeper correction in play. Well, if you look at the upside here, I really believe that we need to get about 2375 in order to spark some keen interest in that market and really ramp up those ETF investments. Now, the gold-silver ratio is sitting back at 82-1, which is one of the lowest levels in 2024, making silver a very attractive investment, especially if you're bullish on the copper market. Now, managed money continues to flow in copper, with copper tacking on about 1.77%. You've got discussions about different rejects going on with one major mining company trying to take over another copper producer at the moment. So each time they shrug off that particular takeover attempt, we see new information come out about how tight the copper industry is and how some of these key strategic mergers and acquisitions are really going to continue to take place here because of the tight supply situation that's going on in the copper market. Now, remember that there is a 2,500 pound copper contract, and it could be a great way for futures traders to get acclimated towards trading in that particular market here. So we're going to want to keep an eye on, again, some key levels in that gold market today. 2350, I would call that your pivot point today. 2375, I would call that your breakout point. On the silver market, 2893, I would say above that point is going to be your breakout point. And then below 2850, kind of more your pivot point here, and we should settle back into a region. If you got any questions, give me a call. I'd love to work with you. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck and good trade.